Good morning, everyone. Anthony Crudele here, and welcome to the Place Your Trades Network. Today, my co-host is another CME former floor trader like myself, Jude. Today, Jimmy and I are going to go over how you could use event contracts to take advantage of market volatility and also lack of market volatility. Jimmy and I have a lot to talk about today because it's election day. We know that this is going to bring some volatility to the market. We're going to talk about that. And Jimmy's pumped up. He's got plays. He told me in natural gas he's looking at. He's looking at the commodities. We're going to talk about the dollar, maybe a little bit about euro, and of course the S&P. Today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts. This is what we're all using at Place Your Trades to make these picks that you'll see us do live today. You could use that link in the chat. There's a link right below in the description. It'll take you to placeyourtrades.com. There's going to be a redirected to the Tradeovate web app where you could get it for free. Go ahead and check it out if you're interested in event contracts, and eventually you could sign up and make your own picks. And remember, the Place Your Trades Network is live Monday through Friday from 9 to 9:30. And every single morning, we put out live picks and what we're doing for the trading day. And also, don't forget Sunday nights from 6 to 7 with J&J. Before we get Jimmy in here, I see a bunch of you guys that are sitting in there. Give us that like button. Share this on Twitter. Subscribe to the YouTube channel. Jimmy likes an audience. He's not going to come in here until we see at least close to as many likes as we have on YouTube. So do me a favor and hit that like button so we can get more and more people in here. It definitely does help us out, and we do appreciate you guys for doing that. All right, I'm seeing the likes start to come in. Thank you guys so much. Let's sing it. Let's bring in my bro, Jimmy Jude. What's up?
Good morning.
Good morning.
How you doing? I don't think I've ever done anything this early before.
I know. And you and I are both, we're sitting here going, we're drinking coffee, not vodka this morning.
I know. It'll cut down on the cursing for sure.
So it's great to have you in the morning, my bro. We, this is cool because this is you and I kind of talking about what we're looking at for the day. Yesterday, when I was talking with Merritt, I talked about the dollar. I just felt like that was just the play you have to watch going. And I was like, I like euro, and I just still come in every morning. And I know I've talked with you about this, and I just look at dollar and I look at rates before I look at anything. What are your mornings like? Like, what are the first things you're looking at?
That's exactly the way, I come in and, on any particular morning, I'm looking like where are the pressure points, what's causing, what's influencing my market the most, which is, VIX and S&P futures. So right now, and it's been for a while, and it's going to continue, is going to be definitely FX markets and rate markets. So I'm looking at, kind of the front of the interest rate yield curve rather than, a lot of people look back at, the 10s and 30s or the 210s curve, but I like to look at the front of the curve because right now, basically the hot button topic is, where are terminal rates going to be and where are they pricing terminal rates and how that is affecting the market. So I'm right there with you. That's how I start my morning every day too.
And let's just put it in maybe some real simple terms. I'm actually going to pull up a chart here. Let's do that real quick. And I think this is something that, we could look at. And this is something that Mary and I were talking about yesterday. It's just like when I come in, the first thing I look at is, okay, where's the dollar at? And for a lot of you that maybe aren't, you don't need to be super technical with the stuff. We're not a super technical show, but if you could just see where the US dollar is a lot lately, it's just dictating what's happening in markets. So as you can see here today, this is just a daily bar of it. Inside yesterday's range, not really doing much, failed to really advance too much to the upside, couldn't really make a new low. And to me, that tells me a lot about what I'm seeing in maybe in some euro plays, what I'm going to see in some commodities. We're probably just not going to do too much. And if equities have any sort of direction, which it looks like this morning is a little bit of a bid, they probably stay in that direction. I mean, is that something you look at like that? Look at it like that, Jimmy?
Absolutely. And especially on like a day like today where, we don't have any like strong economic releases out. This is really, today's going to be all about like election results, So I don't necessarily, feel like the dollar should, should make a strong move one way or the other. But I do want to keep an eye on the individual pairs and the Dixie to see how it's reacting to the election results as they come in, to see, because like you always preach, and I'm a firm believer in it as well, as it's a lot of the times it's how the market reacts to the events or the news of the day, not necessarily what the news was. And I think, was it last CPI that taught us that lesson? Like, it came out hot and we've reversed intraday and ripped 100 handles higher. It's that reaction a lot of the times that is more important.
No, absolutely. So really, we talk about event contracts, and today is a major event when you look at the news cycle, right?
Yeah,
And I don't go into this day really thinking too much about what the outcomes are going to be. I mean, it does seem as though, right, everyone's talking about the red wave, and I don't know if the markets are reacting off of that or not
yeah,
currently, because obviously, we've seen in the past how polls can be. I don't trust
right.
them much. But what's going to be, I think, interesting is that if it does come to fruition, what do you think that kind of sets up in the short term for markets?
I believe, that we'll get that like sugar high this afternoon and tonight if there is a red wave. Just on the premise that it would be more pro-business, it would be anti-inflationary because it would kind of tie the hands of government to any more of those pork belly type of spending packages. So although in the grand scope of things, we 2 days after we're going to get CPI. So, it's nothing I'm going to be married to, but for the next 24 hours, I am looking for, like, I'm leaning towards a red wave and I'm leaning towards being long S&Ps. That's why I like the event contracts too, because like, I don't necessarily like to trade on my opinion. That gets me in trouble. I like to trade on my system and my process, but like, I do have an opinion. I do wake up with an opinion, especially on a day like today. And these event contracts give me that opportunity to play an opinion, but not trade my opinion during the day, which are two different things.
Yeah, I mean, I go back to yesterday when Merritt and I were talking about this. I mean, you look at from Merritt, who's as structured and disciplined of a trader as you're going to meet, right? He's got his
Right.
strategy. You are with what you do. Pax is, I am. A lot of us are here, right? When we look at these event contracts, a lot of times we look at it and say, well, look at, right now, I think that X is going to happen. Like today, I'm long a bunch of yeses versus just being long the futures because I really don't see any really clear way for me to manage risk being long S&P, and I don't want to deal with any sort of headline that comes out on a day where I think it could be somewhat of a snooze fest is kind of what I'm guessing, right? And maybe just a grind up. So I just, you buy some at the money or out of the money yeses, and my thoughts are we go higher. But if it doesn't happen, I've already paid for that trade, right? I bought it. And if it works, great. If it doesn't work, then it is what it is, versus me sitting there trying to manage what I think is going to probably be a choppy day.
Yep, absolutely. And the one thing that I did notice yesterday is like I noticed like equities started to kind of drift up and catch a bid. And yesterday we consolidated, but we consolidated kind of over above Friday. So we're poised to make a move higher. But so far, like fixed income in the bond market and interest rates, they aren't really they're not showing you a red wave yet, And I'm
Yeah.
not sure like if they're telling you they're more concerned about the Fed and they don't really give a shit who wins this election. I'm not sure yet. So that's something that I need to watch during the day to see if they start confirming, a surprise, different surprises in this election. And that's going to be like the little economic releases today are these like close races that are usually won or historically by
Exactly.
blue candidates. If they go red, that's going to be like big news to hit the market. So
Yeah.
those are the things I'm looking at too.
And so is that kind of the reason why? And you think because sometimes the market just it's fixated on a side, right? So in this particular instance, you have a red wave, and the market could be just fixated on any sort of potentially new candidate that is going to win a race that maybe you thought was going to be close or what have
Right.
you. That's a bullish thing, is what you're saying,
Yeah.
correct? Probably.
And I think like it just, it just like it could just this could be a 24, 48-hour experience, whatever, but it could just like that unleash those animal spirits of people in those that a business friendly leaders is replacing, what we already know is going on in a lot of these blue states. I don't want to get political about it, but
Yeah.
um,
But exactly. But like we said, the market gets fixated on some, and it's an event. We're looking at event contracts. What could today bring? How do you
yep,
play it? We're here to figure out how we can make money doing it. And so, what I want to do, Jimmy, is I want to pull up a
yep,
chart because what I think is, everybody's going to go to, okay, we may think that that's what's going to potentially happen. And now you have, look, this is the S&P on the daily. You've got several days of consecutive highs, right? And you
hmm
start to see a little bit of air up top here, right? And you start to look and say, well, you know what? There's not a lot of resistance. If you're just doing basic technical analysis here, resistance comes all the way up around 3,900 ish, right?
yep,
So I think that once again, it gives a day like today that we don't have any real data, but we do have the potential for an event to impact the market. And when you look at a chart, it looks like the path of least resistance right now is to the upside. So it's kind of like that technical coinciding with the situation.
yeah, absolutely. And you know what? And I would also like draw it, like that's what I would look at on the big picture to form an opinion. And then I'd go to like my 5 minute chart, which is kind of like what I refer to as like my snipe, like my scope of my gun. When I have an idea, and then I zone in on like exactly what how I want to get into that position. Like on a day like today, I've noticed that the market a lot of times on the open will come back and test steady on the day. I think that that's what we used to call them, or flat on the day. So
Yeah.
if I like right now, I'm interested in the 3850 strike. Yes, aboves. But I'd like to get them cheap. So I'm going to look on the open. I'm going to look for the market to pull back, maybe to the VWAP or to the flat on the day, and then I'm going to go shopping and try to pick them up cheap, work some bids in them.
It's funny. Merritt thinks that the red wave long play is just too easy, and I don't disagree with him. That I think that it feels like that's the same way I feel. Why I'd
Right,
rather be in event contracts and just be sitting in outright futures currently at this place because I don't
right. It
really.
could get squeezy. It
It
could
could get
definitely get
squeezed.
squeezy.
Exactly. So let's
Yeah.
actually a couple things I want to go over here is number one is remember, like I said, everybody, there's a link in the description. If you want to go and check out what we're doing at placeyourtrades.com and get the app, you just go there, put your email in, and it'll redirect you. You can go and get the app on TradeAvate site from here, but do it through us. So you're on your email list. You can get Shy Girl's blog and a whole bunch of stuff that we've got coming out, which is really cool. And you'll see us releasing more and more with that. Also want to go to the Place Your Trades Twitter, which I recommend following that on Place Your Trades. At Place Your Trades on Twitter. Every morning we're doing a poll, and it's just a good sentiment check. And it's just getting, every morning I come and look at it. And look at today, Jimmy. It kind of is going into what I think Merritt's saying as well, right? It's a little bit too
Yeah.
easy. Everyone's bullish now. 62.5% of the poll is bullish. Will the S&P close above 3825? And like I said, every morning I check these out here on the Twitter page just to see what sentiment is. And every day we're growing the number of people voting on them. So it'd be great if you guys could go in and vote on them in the mornings as well. I actually voted in the yes. You could see the check mark there. So maybe I'm part of the people who's going to be the squeeze later, but who knows? So now we go to the looks of what Jimmy talked about. And we went over just kind of the scope of the day, why we're looking at the S&P. I think is obviously going to be the key one. I think it's the most popular one as well. And what Jimmy, you were saying is the 3850s, right?
Yeah. Yeah. I like them up there. I mean, I honestly, if there's a, I do completely understand that, the viewpoint of it could be an overloaded boat, especially early in the day before actual concrete results come in, and that could set up for squeezes for sure. So you got to be careful on that. You got to be patient on your entries, kind of let the day develop, because a lot of these results in the polls aren't going to be in until afternoon. Unfortunately, that kind of takes the metals out of the play here. I don't know if they're going to be like have any decent movement. And the thing about like one thing just about markets in general, when I look, say I look at copper, gold, silver, and I haven't traded them extensively in my career, but I've definitely dabbled in them enough where I know a lot of the nuance of the markets. But just in markets in general, you see those markets ripped a couple days ago on the China reopening comments. And when you see a market rip like that, especially when it goes a couple standard deviations, you have to like anticipate that the market's then going to spend a bunch of, a period in consolidation and be tight. A lot of people, a lot of new traders make the mistake of like, they see a big move and they're like, holy shit, look at that thing that just moved. And then they look for another big move on it. And then it spends like the next week or two in consolidation, and they chop themselves up, to ribbons, especially buying options, right. You get so excited, and then you start buying like wingy options and stuff because you're like, oh, this thing's moving, and then it stays within this tight range. And it's like, yeah. And that's because, markets are like living, breathing organisms. It expended its energy getting there, and now it's has no energy. Now it needs to go back into a consolidation and, figure out what its next move is. So when for beginners out there, when you see markets rip, that's not the time when you want to be like looking for wingy, options on these event contracts. It's when these markets are chopping in like a tight little zone, and you see them start making a move like out of that zone. That's when you want to start like, paying attention to your wings.
No, yeah, no, that's a great point. And one thing I look at every morning, which is I always look at with the indices, I kind of look at the percentages when I'm on these event contracts, like which one's up the most. So NASDAQ's up the most today. S&P and Dow are up a third of 1%. NASDAQ's up, 0.67%. And then you got the Russell's up 0.3%. So sometimes I like to look to just see if I want to be long some of these, what's also nearest strike and which one's the strongest. I always like to be long the strongest and short the weakest. That's just my mentality, right? And it was funny. So Merritt's saying, I think he went back and said, because he's in the chat today, he's talking about, he's trying to troll me today, I think a little bit, Jimmy, because I got him a little bit yesterday in the Euro. And look, it's okay, Merritt. You're good. So he says he's long the 3750 nose. Oh, I thought he was maybe putting some NASDAQ in. So he's actually looking for that squeeze potentially. But I mean, the NASDAQ, Jimmy, when you look at it here, 11,100. I actually want to go back to that chart real quick. I'm going to pull up the NQ. Actually, I'll just pull up the MNQ. That's the micros. Let me flip this towards a daily and just to get a look there. And when you look at I got my, remove those drawings. Yeah, I mean, the NASDAQ too, 3 consecutive days of higher highs. Well, actually just 2. And once again, a little bit of air. I mean, I just feel like, I know it might seem obvious, but this is kind of why I like the event contracts for this, because it's like it definitely could be really sloppy in here early on. But when I just look at the chart, it doesn't look like it too much downside here. I don't know, what you think about it either.
Right. I think it could come back to test that, like, what is that, 11 evens or in that area.
Yeah. 11.
But you know what, like, isn't it kind of interesting? Like, I was looking at, I don't trade the Russell, because it's like, I think you almost have to trade the Russell. You have to be a Russell trader to trade the Russell, because it
is different.
It's different. But I did notice that definitely is like that's made the strongest like patterns. That one, the Russell, I don't think it didn't take out its June low. The S&Ps did, and the NASDAQ did, and now it's kind of like chopping in almost like a rising wedge today on like the hourly. Like if I had any idea what I was doing in the Russell, I would imagine that's probably out of the 3 might be the one that like could get the best bang for its buck in a stop run above this like 1825 area. But I really, I don't know enough about it to like.
Well, that's once again why you could use these. And what I also think when you look at the Russell, and we've talked about this, you and I in depth in other podcasts and stuff like that, it is the one that's going to represent the U.S. economy the most. So I also think that any sort of, if we are looking at what everyone's talking about as a red wave as potentially bullish for the economy and the market, the Russell could have the one that has the greatest upside as well.
Right. And in addition to that, there's a lot of talk out there now that the Republican Party, who may take, the House and the Senate here, is very pro small business, but is not necessarily aligned with big business at this point. That big business is kind of has been leaning left, especially tech firms,
Yeah.
So once again, Russell leading the way, especially in a red wave, you might think that might be the one that really catches a bid today because they'll benefit the most.
Yeah, I mean, I'm going to quickly go back to this chart and I look at it like this for me. I mean, I'm going to make some of these plays today. I mean, 1825, I look at this area and say, well, look, 1825, it's only $5 away. The yeses are actually kind of pricing in already a bullish look because they're not really at the money. If there is any sort of a pullback, I'm actually going to work some of these because I actually like that play as well. I'm going to get not too cheap here, but 8. I'm going to try and buy. We'll try and buy 10 start, and we'll see if I can get them. So that'll be something that'll be interesting to look at. And so, yeah, I actually, just by looking at that Russell chart, once again, this goes back to me, it's a simple way to play it. I put it in, I pay for the trade, I'm in, I'm done. And we'll wait and see. Maybe I get them, but on the open, I'll actually walk and I'll start to watch. But if it does get above 1825, I agree with you. I think that could be a little stop squeeze, and I would buy those yeses. Anything you want to look at before we go today? Yeah, I think Euro was kind of dead still. What else do you think?
One more thing I noticed, because I've traded a lot of different products, but I don't concentrate on them anymore. I traded natural gas for a while, so I know a little bit about it. And I was looking at that chart, and we had like a blowout gap up 2 days ago or yesterday or whatever, and we've come down and filled the gap, and we're hitting into like some decent support here around 630. That might be something that, as you came all the way down, you filled the gap, you're hitting into support here. That might be a place where you start shopping for cheap upside on a day like today too. It's kind of, it's completed its pattern, and I believe like there should be a decent bounce in here. So I'd be looking to play some 650, 660 strikes, somewhere in that vicinity. I'm in the crude market, basically is kind of doing a similar move, but I don't know. I could see crude kind of staying between. Crude's pretty overbought, so I could see crude kind of bouncing between 90 and 93 today. So I don't really want to play the wings. I think natural gas in the energy sector might be the play if that's what you're looking for.
Yeah, I mean,
and again, you can play it with the event contracts. You can play it cheaply and know your risk profile. And that's the only way I would really play nat gas at this point in my career.
Yeah, I mean, same here, man. Same here. I know I've already got, if you have the app up and you're using it, you could see your position there. I'm already long 20, 38, 25 yeses in the S&P. NASDAQ, I know I have some of those on too. I've probably got like 5 positions right now because I got a problem.
Nice.
I know. Well, you know what?
That's the probability. Well,
20 NASDAQ, the yeses. I'm working the Russells. Oh, I actually, you know what? I bought some Dows yesterday. Let me see. That should be in here. Yeah, there it is. I'm long 20 Dow at 33,000. I bought some of these overnight because I was kind of thinking for that play today. And you know what? I'm going to be looking at the natural gas. So that's the play, everybody, for us today. What we're looking at, pretty simple. I mean, Jimmy and I laid the playing field out there for you. What we're looking at is yeses in natural gas. We think crude oil is going to be choppy. We're kind of staying away from there. So look for yeses in natural gas, a little bit out of the money. And it seems like the Russell's the one where really, if it does start to go, Jimmy, that's where we could play that little bit of that out of the money strike, because that thing could really start to go. And as you can see, I'm already long yeses in NASDAQ and S&P. So we're putting money where our mouth is, and we're a little bit bullish this morning, pretty much in everything. No no's. We didn't take any no's.
Yeah.
Worries me, Jimmy.
Here comes the squeeze. Right? I can take squeezes when I'm in event contracts. It doesn't bother me. When I'm in when I have a futures position, it makes me want to curl up in the fetal position.
Oh, especially in natural gas. There's no greater pain than having that thing press on you for the day.
That has actually made me cry before. Natural gas. I'll admit that.
Well, it's great having you on in the morning. Everybody that's tuning in, it's great to have Jimmy here in the morning. Give us
Thanks, brother. Thanks for having me. I appreciate it.
Yeah,
Love
well, we had
being
a
here.
great time today. It's great to get in your mind to see what your plan is for the day. And it's great to be with all of you guys. We saw the comments. Really appreciate everybody coming in, putting the comments. And remember, go to playertrades.com. Follow us on Twitter if you're interested in that Trade Evade app to trade these event contracts like Jimmy, myself, and many of us other traders here at Player Trades. That link is in the description. Hit that. And until next time, tomorrow morning is going to be Brian Shannon with Penny. Going to be a busy rest of the week, Jimmy. You got to be
Awesome.
tuning
Yeah,
in every morning to see what we're doing here.
for sure. For sure. It's a great week to talk markets and trade them.
All right, everybody. That's it for me and Jimmy. Have a great day. Peace.
Happy hunting.